Hello, welcome back. We're at the Precious Metal Summit in Zurich, and Marc Faber has kindly agreed to meet us at 6 p.m. at the end of the show and take a bit of his time. So, Marc is the author, and you'll probably know of the
GLOOM BOOM and DOOM.
GLOOM BOOM and DOOM. Thank you for correcting me, Marc. First of all, thank you for coming on so late in the day.
It's not a problem.
I just watched your presentation or your conversation with Grant Williams. I'm sure we'll be taking some inspiration from that chat. Just to kick things off, those who are essentially not aware of who you are, why don't you just introduce yourself and your career in this industry?
I'm a young, handsome boy.
I agree.
And I was born here in Switzerland, actually here in Zurich.
Yeah.
But I lived for the last 50 years in Asia. I studied here and in England. And then I started to work for an American investment bank, Weld in New York. And in '73, they sent me to Asia to build up their business, which I did. And then I worked for Drexel, Burnham, and then I started my own business. Okay. And I manage money, and I write, and I do everything. I'm a businessman.
Good. Okay, good. Look, like I said, you're managing money at the moment. You're writing a lot, especially on this market as it stands. You've been writing about the gold market in particular quite substantially. I asked Grant, Grant was on the channel earlier as well, and I asked Grant this: do you think there are any ramifications for gold in particular, given Trump's now in power, versus if the outcome was Kamala? I mean, we're already seeing a bit of a slump in the gold price last couple of days. I think latest price as of now is around 1620, which is quite a fairly sharp fall from where we were. What do you think these next 4 years, do you think the outcome of the gold price and the outcome of gold performance has fundamentally changed because of this new presidential election?
Yes, but I believe that the initial move, the downward correction, and the strength in the US dollar are actually terminal moves. In other words, they will be reversed.
Okay.
Trump, if you look at him and his personality, and his history of borrowing money and never repaying his debts, it's actually very bullish for the gold price and for precious metals. Okay. So I would use, if I didn't have any gold, I have my gold already and I've had it for 40 years, but if I didn't have any gold, I would buy here on this correction. It's a gift of God.
Well, yeah, we've had other people on the show before, which is, it's either a gift of God or in terms of gold itself, a gift of God or celestial dust, right? As in old stars breaking up. But in terms of, right, so you're essentially saying there then that in terms of if you're looking a bit further forward, doesn't really matter if it's Trump or Kamala, it's the same outcome. Gold price needs to go up, too much debt. You're not a believer in this world that Trump has espoused, in that tariffs can increase the amount of money coming into the US, and then you'll also have this Department of Government Efficiency that can reduce some of the waste and try and balance the books a little bit more. You don't see that as a possibility?
I know many people, they were businessmen and successful businessmen. They went into the government and they tried to rationalize it. Not possible. It's very difficult. Okay. That I would emphasize. And number two, the tariffs is a horrible economic measure. And it will probably accelerate the relative decline of the US vis-a-vis other countries in the world. And in my opinion, it will be negative for the US economy. It's not going to be positive. And it will necessitate more money printing because they have no other option. So actually, I think that of all the candidates, Trump is a favorable asset for the gold market.
Okay, fine. So Trump coming in, in terms of this money printing aspect, so there's two sides of this, right? You've got the money printing that's going on, and then you've got the debt levels that continue rising, right?
It's connected.
Of course they are, because essentially what you need to do is inflate your way out of debt. But It doesn't seem to be happening though. Have you heard that term before? You need to inflate your way out of debt.
Yes.
But the debt keeps going up, and so does the money printing. So at what point do they start inflating their way out of debt?
Actually, this is a very good question, because if you go to Istanbul or to Buenos Aires and nobody tells you, you wouldn't know that there is inflation of 80% or 100% and so forth. And the business functions, it goes on. So you can print money for a very long time before it comes to an end, but it will.
Yeah.
Maybe 3 years, maybe 4 years, maybe six weeks, who knows. But the one thing is clear, what happens, and we've seen the start of this happening already for the last, say, 10 years. GDP goes up, nominal GDP goes up. The standards of living of the average American goes down, or of the average European. I'm not talking about the 1% at the top of the pyramid, of wealth pyramid. Money printing, monetary inflation benefits some people and hurts the majority.
Yeah.
And the people don't realize initially the monetary inflation, the negative sides, but they wake up when things become unaffordable. Like young people, the affordability to buy homes is at the lowest ever in the US, at the lowest ever. It's in a way a tragic occurrence, because you would think that the money printing would make things affordable. No, the opposite happens.
Yeah, no, you're seeing that, especially in the UK, for example.
Yes.
You're seeing that massively.
Yes.
Obviously, GDP per capita has gone down
Yes.
6 quarters out of the last 8, and GDP as a whole is
expanding. Yes,
expanding, and obviously, it's individually people are feeling a lot worse off. And so, if you're an individual, because one of the things that someone's told me in the past, which I think is very interesting, is a guy called Dominic Frisby, who's been on the channel before, is essentially where the problem lays is that the money, say for example you have a job, you're being paid X amount per month. The money then comes into your account. If you keep that money into your account, then slowly the value of that money is decreasing and decreasing and decreasing, right?
correct.
Is this where does this where an account that would, I don't know, say an account that you have that transfers your money automatically into a gold-backed current or basically something that goes up with the value of gold, or you can put it all into an ETF, or you put it all, but something that's tangible and tradable. It seems like that's the sort of world where a lot of people are now starting to get their head around, which is similar to Bitcoin and some of these other areas, where you want to basically get your money out of fiat currency as soon as possible and get it into another asset that can hedge against inflation. And that's sort of where we are now, isn't it? It's no matter whether or not Trump's in and for 4 years and the war stop or whatnot, you're going to have this inflationary period no matter what happens. So the best thing to do is get away from hard dollars, no?
Yes, I would assume that, but it's been wrong until now. The dollar has been strong, especially in the last few days.
Yeah.
And I'd like to point out one fact. Every inflation eventually comes to an end. We have in the Western world consumer price inflation. Consumer prices for goods and services are going up. But it's not been extreme high inflation on consumer prices, partly because of productivity improvements, partly because countries like China have been exporting disinflation. They can bring products to the market at lower and lower costs. But we had very high asset inflation. All assets are inflated. Now, if you look at all the asset classes, bonds, stocks, commodities, properties, paintings, and wines, and diamonds, and so forth, we can sort of try to establish which assets are the most overvalued and which assets are relatively low. I'd say but other people have a different view. But my view would be the so-called magnificent 7 stocks in America are way overvalued.
Yeah.
Way. But if you ask me, in this case, do you sell them short? I would tell you no, not for the time being, because if they print money, maybe the bull market in these stocks continues. But I would kind of put these 7 stocks aside and say, I'm not going to buy it here. And then I would look at assets that are not particularly expensive. Now, since we are here at a gold conference or metals conference, my view would be that precious metals, of course, they've gone up. When I started to work in 1970, the price of gold was $35 an ounce. It's now 2,600, whatever. So it's up substantially, but if I then compare gold to the monetary expansion we had over the same period of time, and to the expansion of credit in the world, and to the expansion of the monetary base, then I think that gold and other precious metals are not terribly expensive. They're up. And the value of money has declined. But if I didn't have any gold, I think I would still buy here.
Buy today, even at these prices?
Yes.
Because it's...
I think I will buy more in the next maybe week or 2 weeks.
Okay, buy the dip. Because obviously it's seen at the moment that really it's a game the central banks are playing. It's not really gold at these prices. It doesn't really seem as appealing to the individual when you have the amount of essentially non-Western central banks essentially scraping up all the demand. And one of the things that you mentioned when you were chatting to Grant on the keynote about around an hour ago is you mentioned this 30% increase in the last year in gold price. And in other years or other bull markets, you would have seen, depending on the mining company, but a 200% increase, say, in mining stocks, right? And I'm almost starting to worry. Perhaps it's a worry I shouldn't have, but I'm almost starting to worry that we've missed this bull market. The gold price has gone up, Trump's come in, the gold price has come down. Obviously there are some reasons to potentially suspect that gold will be suppressed because if wars if the wars are potentially dealt with in the Middle East or in Eastern Europe, and the economy in general does start to improve, if these are potential outcomes, perhaps that does suppress the gold price to an extent. So what I'm trying to say is are we in a position where we've just seen gold go on one of the best rallies we've seen in God knows how long, and the equities haven't had a chance to catch up, and we've missed the boat, or the equities have missed the boat in this space?
Yes, I mean, for me, it's surprising that gold equities, the miners, have done as badly as they've done. But I've written about this repeatedly, and I kept on saying, the miners are not acting particularly well, compared to the price of gold.
Yeah. And
I wonder why, and I don't have the precise answer, because normally, when the gold price goes up 30%, the miners go up 100% or something like this, but it hasn't happened yet. Now the gold bugs tell me it will happen. Who knows, maybe. Maybe,
but I do wonder sometimes, obviously, one of my main fears in this space is the left get criticised for being an echo chamber on a lot of issues, like trans issues or other social issues. And I do start to wonder now that we're in this position of if us gold bugs are in an echo chamber or not, because it has been quite disappointing to see these equities not perform under such strong gold price conditions. Something that I was talking to Grant about earlier was, do we need to see, like the big seven, the magnificent seven, do we need to start seeing them fall before we start seeing inflows into things like gold equities? Because why go into a gold equity when you can get into Nvidia, who seem to be just trading up and up and up?
Yeah. You're raising a very important question here. We can agree among, say, economists and market observers that liquidity is not tight. If liquidity was tight, the markets wouldn't be making new highs.
No.
And if liquidity was tight, bonds would rally because people would have the feeling that the government or the central bank is doing something to fight inflation. But since they cut interest rates in the US twice already, long-term bond yields have not gone down, but they've gone up. So it's a sign that the market, the bond market, is concerned about future inflation. Now we have this inflated asset values, and the money flows whenever something is moving. People go into that because they have social media. They know it. The whole world is in NVIDIA.
Yeah.
That's why it's the biggest company nowadays in the world. And the Chinese buy NVIDIA and gamble in NVIDIA, and the Hong Kong Chinese, and in Switzerland the retirees are buying NVIDIA, and everybody. And they also buying cryptocurrencies because they move. And the gold market didn't move for a long time, so people didn't buy it. This year it moved up, but if you look at the buying of gold, it's not by the individuals.
No.
Meaningfully. There's no mania in the gold market from individuals.
Yeah.
The buying, the accumulation has been in the hands of central banks and maybe some rich individuals who say, okay, I have $1 billion. I also believe we are in a financial bubble and it's not sustainable and the deficits and this, that. I take 100 million and I put it in gold, physical gold. But on the individual level, there hasn't been much gambling in gold.
I guess that makes sense in a way as well, doesn't it? Because if the demand isn't coming from the individuals in the rally of gold prices, coming from central banks, these central banks that are interested in gold aren't going to be buying gold equities. But you'd think as a knock-on effect of the central banks buying these gold equities, you would have seen some more individual excitement on the equity side of things anyway, right? But I guess that, again, we'll see if that happens. I think if you're right in the sense that if you're right in the sense that this is only a small dip, market correcting, people rebalancing their books based on new information with Trump coming in, and then we can go up again, then maybe that is still to come. One of the things I found really interesting with the chat as well was someone asked you a question around silver, and you said as much as that you love silver, you think potentially platinum might have the most talk on it.
Yes.
Do you think central banks will ever buy platinum again and use that as a monetary metal, or is that too far now into the industrial metal group?
This is something I don't know, but I suspect that when you look at asset prices and how they move, the problem with monetary inflation is that not all prices move at the same rate.
Yeah.
And what then happens is there are bubbles here, and then this bubble will deflate, like commercial properties in America is deflating.
Yeah.
So another bubble here. The money then...
It's like whack-a-mole.
And then it's like volcanic eruptions in different countries.
Yeah.
And my view is the gold miners will probably move one day, but maybe not quite as much as the gold bulls or the bugs or whatever, as they expect.
Yeah, okay.
And also, from my point of view, I want to explain why I favor physical gold over, say, mining stocks. I also have mining stocks, but not that much. The reason I own gold is that I believe the current financial system is going to collapse.
Yeah.
Now, I'm not saying it will collapse tomorrow, because it can go on, as I explained before in the case of Istanbul and Argentina, it can go on for a very long time. But I want to have some assets that are physical, which you cannot print. And it is true that you can't you can print bitcoins, but it's becoming more and more expensive.
Yeah, you have the
but you can have alternatives to bitcoins, other cryptocurrencies. Whereas the alternatives to gold and silver and platinum are very limited.
Yeah.
You could say, okay, I own a house, is some sort of like a real asset. Yes, I think that people will do reasonably well in houses, but what happens with commercial properties and also rental properties, during very high inflation, the government will come and tax you, or they come and say rent controls.
Yeah.
Then you can't increase the rent sufficiently to pay the overheads.
Do you see a scenario where, obviously you have this inverse relationship between gold and interest rates?
Yes.
It's been a bit of a funny couple of years, obviously, with interest rates being high and gold price also rallying. But do you see a scenario where, obviously, where gold is a non-yielding asset, where people will start flooding back once markets are a bit more certain? Because we've had COVID, we've had some pretty big major upsets in the market over the last couple of years. Do you think, and we've had wars, do you think as things potentially the dust starts to settle a little bit over the next couple of years, hopefully it does in a way, you might actually see a bit of an exodus from gold into more risky assets that aren't too concerned?
It's possible,
yeah.
But what I try to explain is that risky assets are very high already. They have benefited from the monetary inflation. I don't think that gold it's gone up, yes, there's no question, we can tell, but compared to the quantity of money, compared to the quantity of government debt in the world, private debts and so forth, I don't think that the price is that high.
You can't see central banks diving back into bonds or anything.
And you say that interest rates went up in the last few years.
Mm.
It is true that interest rates have been going up, but are they high? I'm not sure.
Well, not as high as the 90s, no.
Say in 1980, the 10 years treasury was yielding over 15%.
Yeah.
So at the present time, the inflation actually may be much higher than the bond yield.
Mm.
I have some statistician, they calculate inflation very differently, and I can assure you it's much higher than what the government is publishing.
I completely agree with that, yeah. Yeah, well, it's funny how they select their inflation data, because it
doesn't make any sense.
Well, it seems to be anything that's too high they'll take off the list, and anything
Yes, absolutely, yeah. yes. And my observation, I'm from Switzerland. I can see that the price level here is up substantially, and that the inflation that I would measure would be much higher than what the government is publishing.
Okay. But I guess a lot of this gold price, the way I think, if I try to boil it down simply, and I know you shouldn't always try and simplify things, but it seems like obviously you've got strong demand from central banks.
Yes.
That really is a knock-on effect from Russia invading Ukraine and being kicked out of the SWIFT system and having assets seized and whatnot. So you've got a lot of buy-in from central banks that are not part of the West, let's say. And then the other one is inflation. So you've got loads of money printing, the value of the actual dollar itself is going down, or any other currency is going down, and therefore the gold in general terms hasn't really changed. It's just the value of the dollar's changed, and gold's really stayed the same value. If you then look at buying a house with gold versus now versus 50 years ago, it's usually over a set period of time, it's usually around the same. So the value of gold, would you argue that the value of gold as such hasn't really changed, it's just the value of money has changed?
Yes, of course, there has been this monetary inflation, and the purchasing power of money has gone down steeply. Yesterday a lady gave me the menu list the first menu list of McDonald's.
Well, it's probably cheaper than the Hyatt that we're in now.
Yes, that I assure you.
Yeah.
So the paper money has lost its purchasing power. That everybody agrees. How much it's lost is not entirely clear.
Right.
This is the problem with monetary inflation, because you have to adjust everything. Say, I have a deposit $1,000 in 1970. The $1,000 today would buy a fraction of
of the
$1,000 at that time. But if you and I put that $1,000 on deposit, during the 70s we had returns of sometimes 20% interest per annum. So that $1,000 has grown into a few $1,000s. So I'd argue it lost purchasing power, but not as much as one would think.
So is the nuts and bolts of the argument that you're saying for gold as to why you'd want to own a lot of gold and why you do own gold is you cannot see a way out of increased debt in most jurisdictions and more money printing, because really that's the crux of it, right? You see the value of money continuing to decrease at an aggressive rate.
In my view, especially under Mr. Trump, money printing will accelerate. And the beauty of essentially the money printing is the worse the economy becomes, the more money they will print. You understand? And my view is very negative about the economy. I think in real terms, inflation adjusted, and inflation adjusted for the true rate of inflation, not the one that the government is calculating, the economies are all contracting.
Yeah, interesting. Okay, how just look, obviously you've been investment banking, you're an investor, you've been monitoring this market for a long time, as we said. If you was president of the US right now, how would you solve their debt crisis? How would anyone solve this debt crisis? It sort of almost got out of control.
For a politician in a democracy, it's very difficult to solve it, because there's three ways. You could increase taxation meaningfully, economy tanks.
That's not good. Yeah.
And you could, then we would have to decide to increase taxation for whom. The second is cut spending meaningfully.
Yeah.
Very difficult. Cut the pensions of the veterans, of the police force, of the firemen. They have a revolution.
Yeah.
So, in my view, money printing is almost guaranteed. Yes, guaranteed.
There's nothing else they can do.
It could be done if people would vote for politicians who tell them, look, we have to tighten our belts. We have to cut spending and increase taxation. But no politician in a democracy will get elected with these programs.
No. Okay.
So I think that, okay, now the gold price went up a lot and we can have a correction for a while and so forth. But my view would be the way the dollar is strong at the present time and the way the stock market is strong at the present time, it will run into a major peak from where the dollar will weaken, stocks will go down, bonds, for a while they may rally a bit, but not all that much. And this environment would then lead to more money printing globally.
Yeah.
And look, each time I open the newspaper or I read and so forth, we are in an environment where the governments and the financial system, the economists, they all say, oh, the government should do this and the government should do that, and so on. They're all interventionists. They're all of them. It's very difficult to find an economist who says the best would be for the government to get out of the hell of the economy and do nothing.
Yeah, no, I agree. Look, Mark, I really appreciate you coming down and sitting down with us.
It is my pleasure.
No, thank you very much. And
I think it's not a question of an individual selling his house and selling whatever his portfolios and putting everything into gold. But given the low level of gold compared to foreign exchange reserves in the world, to money in the world, and nowadays it's actually difficult to say what is the money. Is Bitcoin money? If Bitcoin, if you tell me Bitcoin is money, then the money supply has gone up even more than than is published.
Well, it depends how you look at money. If you're looking at money as things that can be traded, then you could argue that it is, and you could still argue that gold is, right?
Yeah, sure.
So, no, it's an interesting question. No, Mark, thank you very much for your time.
My pleasure. Thank you very much. Bye-bye.
Cheers.